Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and we're going to talk about commodities, which, by the way, for the month of Feb have not performed so well. January, remember, was a very strong month. We were talking about China reopening, and then dollar had seen some profit taking as well. It was knocked down all the way to 101, 102 kind of levels. But all of that clearly turned around in the month of Feb because the China's demand is still uneven, erratic also, and the economic data have not started to pick up. The dollar index has seen a very sharp rebound to around 7-month highs. We are back around 105 kind of levels, and the economic data from US has been on the positive side, telling us that the US Fed rate hikes could be aggressive going forward, and that's exactly what has bothered the commodity prices. So the month of Feb clearly closing in negative for most of them here. The markets also are looking at the fact that the Europe, while the energy crisis in Europe is far from over, but there as well because the inventories have been strong, the winter not so harsh. That also seems to be phasing off now. So starting off with the crude oil prices, and for the month of Feb, it's going to be a fourth monthly decline coming in for the crude oil prices. We have seen 2.5% of decline for the month of Feb for crude, and not just that, the precious metal prices have continued to decline as well. So gold is down 2.5% and silver down 12.5% for the month of Feb. It's not a different story or a separate one for the base metal prices also, where we are dealing with losses too. Copper is trading at a 2-month lows. You have aluminum prices which have come off their 7-month highs. For aluminum, it has been a record production, up by 4.5% in the previous year, at much higher levels in case of China. Iron ore prices also have come off. They were trading at a 7-month highs, and we did see strong gains in the month of Jan. Not anymore. In the month of Feb, there. Nickel is also trading at a 3-month lows right now, as Indonesia production increased by 50% in the previous year, and much of the surplus is seems to be coming back into the street there. So if you look at the report card for the month of Jan, we saw good gains coming for copper, zinc, and aluminum, anywhere between 10 to 14% on the higher side. For the month of Feb, though, copper has declined by 6%, 12% down on zinc, 11% shaved off in case of aluminum. And the markets do believe that if we are looking at a 50 basis point of a rate hike coming in from the US Fed, you could be looking at further declines. While that has been factored in and is the reason you are looking at these declines coming in, but the commentary from the US Fed is going to be important. Tomorrow it's about US productivity numbers as well, so that would tell you where the streets are headed. But also with the liquidity being sucked out, especially as the US book unwinding is happening. So from $9 trillion at one point in time to 8.35 trillion in 2 months, and that number will continue to go down. Markets do believe that that easy liquidity period perhaps seems to be getting over now, and until you see sustaining demand from China coming into the market, there is some more pressure that you can see in case of metal prices. So Feb wasn't so good, and markets do believe that for the month of March as well, depending on which metal you're looking at, there could be another 3 to 8% of a decline continuing here. Gold and silver also can be under pressure. And as far as crude oil prices go, well, even as there are various sanctions coming in on Russia, but the point is the Russian crude, the Russian metals are finding its way in Europe and a better part of Asia. And that means that there is enough availability. There is not a supply concern right now, and that continues to be on many of these commodities.